Hello friends, today I want to talk to you about home office deduction and show you why you might be overpaying taxes by doing home office deduction. Now I know, sounds like a catchy line, like what? How can I be overpaying taxes if I'm using home office deduction? In matter of fact, I'm saving on taxes. I can show you in my tax return. Yeah, I see them all the time, right? But oftentimes those tax returns are wrong. And this can cost taxpayers a lot of money. Sometimes problem is genuine because taxpayer doesn't really know any better. They may be doing on TurboTax or something like that, so they don't understand little things going on in your tax return, so they just skip proper entry in the software. That's one problem. Problem number two is, even if you're going to a professional, whether it's my team or somebody else, at the tax time, nobody has time to go through all these minor details, honestly speaking. You got to tell your taxpayer, this is what I want to claim on tax return. And then if you want to, dig deeper into something, you really need to set up a consultation with them. So that way, when they are not in time crunch, they can sit with you and analyze each one. So you can say, hey, take a look at my home office. Am I doing it right? Take a look at this. I'm doing right. During tax time, it's just a number crunching. Whatever you tell them, that's what they're doing. Their job is just to make sure that tax return is prepared as per your instruction. That's all they're doing. They're not really getting into consulting work at that time. So even if it was done by another tax professional, I don't blame them whatsoever. I just want you to understand that. All right, let's go back to topic. Home office deduction, why people are messing it up, why they are being done wrong. Two types of deductions. One is standard way. Okay, that means we simply say, hey, this is the max allowable amount by IRS, and we're going to claim that, and we're done. Nothing to worry about there. But obviously, that deduction is not good enough. It doesn't really get you a lot of tax saving. Some, but not a whole lot. You can actually save a lot more if you do an actual method. And that's what a lot of people like to do. Simply speaking, let's say 20% of your house belongs to a home office. And maybe the property cost you about $100,000 a year, just using a simple math. That includes your, interest payment, that includes your property taxes, your utilities and all that kind of good stuff. It does not include your principal payment, okay? Because that's an equity that you're building, but any interest that you're paying on that amount, utilities, maybe maintenance of that property and all that, that's all part of that. Now, out of that $100,000, 20% of that property belongs to your business. So you claim $20,000 on your tax return, and you are getting a $20,000 deduction. So far, so good. You're loving it. I mean, if you're in 30% tax bracket, that's a $6,000 tax saving for you. So you go like, hey, Deepak, where did I go wrong? This makes perfect sense, right? Isn't it? On the surface, it does. But what I want you to do is pull up your Form 8829 from your last year tax return, providing you did claim actual home office. And I want you to take a look at the depreciation column of that particular form and see if you see any amount in there. Most likely it is either zero or nothing in there. That means you did not claim any depreciation. Now you might be saying, wait a minute, Deepak, that doesn't make any sense. This is my home, okay? Don't you know that you don't claim depreciation on your residence? Maybe you should go back to tax school and learn your taxes once more. And I totally get it. I think that's where the confusion comes from. But I want you to think about this one more time, right? On one side, you're telling IRS that 20% of this property belongs to my business. That means it's not my home. 20% of it is not my home. 80% is my home. 20% is not my home. And that is why I'm claiming it as an actual expense on my tax return. So you are actually explicitly telling IRS that this is not your home. It's a business property. And what do you do with business property? You depreciate business properties, but you haven't been depreciating them. So that's a red flag number one. I have examined a few different tax returns. In matter of fact, last year, I don't remember seeing a single tax return where I saw depreciation on 8829. Okay, that's mistake number one. Now, in case of an audit, the agent will say, hey, look, I see that you claimed $20,000 in expenses on your tax return, but I see you didn't put anything in depreciation. What's going on? And you might say, I didn't know that. I thought it was my home. Why should I worry about it? And IRS agent probably if he's cool, he's probably thinking, well, at the end of the day, you didn't really cause any harm to IRS. You actually overpaid taxes on $5,000. Because if you had claimed that depreciation, I'm just making up $5,000 depreciation, it could be any amount, but just stick with me. Let's say if you had claimed the depreciation for $5,000, that would have reduced your taxable income by $5,000. But you didn't claim it. And because you didn't claim it, guess what? You overpaid taxes on $5,000. So, maybe the agent is willing to overlook that mistake. I'm not saying it's the right thing to do. But I'm just saying, right? If they're going, yeah, it's a mistake, but it doesn't really harm us. It actually harms the taxpayer. Now, if they want to make a big deal and make you amend the return and all that kind of stuff, yes, possible. They maybe, they want to go by the books and they say, hey, do it the right way. You need to amend your return. Possible. But I'm just saying, most people will say, look, it doesn't really hurt us. It actually hurts the taxpayer. So number one, if the number on that field is 0 or nothing, then most likely you're hurting yourself. That's point number one. So you're losing. Now comes the second part. The second part is, what happens when you sell your home? What happens then? Do you think you're going to remember to tell your tax professional that, hey, by the way, 20% of this property has been used for business purposes and I never really claimed depreciation. How should I fix it? Most likely you're going to forget that fact. You're not going to tell them. All you're going to say is, hey, this is my primary residence, I'm selling it. And that's it. Even if you're, for example, their client and they've been doing your taxes for years and they might have claimed your home office deduction, they don't remember any of that stuff, right? They do hundreds of tax returns. They would not remember your specific situation unless you tell them. So think about it. Let's say if you're my client, you come to me and say, hey, Deepak, I sold my home and I made $300,000 on that property. And I might say, oh, great. Okay. So, let's say you're single. I say, okay, $300,000 gain, $250,000 is your exemption. So you're going to pay $50,000 in capital gain. But you forgot to tell me that there was a home office deduction claim on that property. This is where things go wrong. So what happens in the IRS code, we have two amounts we look at, allowable amount and allowed amount. Allowed amount is what you claim. Okay, so you could have claimed 0, for example, in your case, because you haven't been claiming that depreciation in your home office for years. So it's 0. But the allowable amount, let's say, was supposed to be $5,000. Like I said, I'm sticking with that example that I shared. Let's just say it was supposed to be $5,000. You just happen to claim it 0. So allowable still is $5,000. And let's say, over the last 10 years, that's equal to $50,000. That means that your basis in the property have actually decreased by $50,000. That means you need to pay tax on it. Now, there are two types of tax. One is depreciation recapture tax, and the other one is capital gain tax. So depreciation recapture, we can still make an argument. Again, it's wrong, but we can still make an argument that you missed to claim the depreciation on your tax return earlier, so that's why you should not pay for that. And hopefully IRS will accept that. Again, please, I want to be 100% clear. I'm not saying that's the way you should do it. You should do it properly. I'm just saying, if you already made a mistake, what are you going to do, right? So you're going to be honest with the IRS and say, look, I didn't know that. I forgot about it, blah, blah, blah. And maybe IRS said, okay, you know what, fine. Since you didn't claim the depreciation to begin with, we will let you avoid the depreciation recapture at the time of sale of the property. Okay, that is if they allow you to do that. That's problem number one. Problem number two is, even if they allow you to skip it, okay, that does not increase your basis. In matter of fact, your basis must be decreased by allowable amount, not allowed amount, not what you claimed on tax return, what was supposed to happen. There are two different taxes we're talking about. We're talking about recapture and we're talking about capital gain. Recapture tax, sure, we can make an argument that, hey, you didn't claim it, so maybe you should not have to pay for it, okay? But allowed amount, allowable amount still needs to be added, subtracted from your basis. So let's say if your basis in the property, like I said in an example, was, I don't know, let's just say it was $500,000 sale of a property and your basis was $200,000. That's how the $300,000 gain came in, right? If your depreciation was supposed to be $50,000, but you didn't claim it, I need to decrease the basis of your property from 200,000 to 150. That's the law. Okay, so that means now your basis is 150. So if you sold $500,000 property, that means you need to pay capital gain tax on $350,000. So you see, you didn't save any money to begin with because you did not capture the depreciation on the proper 8829 to begin with. So you lost out there. And then at the sale of the property, you end up paying more in capital gain because that was supposed to be accounted for. So there are major issues with that. So please, if you are doing an actual method for your home office, I strongly suggest you work with a tax professional who can properly account for that on your tax return. Missing this can be a big mistake, and it continues to grow over time. So, if you missed it one time or something like that, maybe it's not worth amending the return and paying all that cost and all that, but maybe going forward, you want to fix it. So I hope you find this one helpful, because this is a common one that I'm seeing right now. And by the way, if you aren't part of my community, please subscribe to this YouTube channel. You can join my WhatsApp group. If you're interested in learning more about finance in general, then you can join our coaching program. And if I can help you with taxes, reach out to me. Just go to taxcodeadvisors.com. Reach out to me from there. I'll be happy to help. All right. Thank you so much, guys, and I'll see you next time.